is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And what do we got going on? Well, we're down 5 points on the S&P cash after being down about 20, got down to 3,000 on the S&P cash. Dow's now just down 8 points. NASDAQ's up a point. Russell's up 10, which might tell you something. The strongest of the bunch, and that comes on the heels of comments earlier in the morning over most of TFNN, where the president was less than happy with what was happening with the Chinese. They made some agreements in the meantime to buy some soybeans and some other stuff and pork. And apparently they've decided that they're going to have an economy with that agreement, and that it will look the other way. Not doing any of it, at least according to the press. And pulled back a little bit this morning. We're basically back to unchanged, really, down 5 points, no big deal. Apple out after the bell. We got a stock that might tell us a little bit about what's going on in that business. So we'll look at that one here coming up in a few minutes. Other things going on, well, it's all hurry up and wait. We're going to have a couple of minutes of sheer terror when Apple does come out and announce its earnings. Then we're going to go back to some sheer boredom, probably all the way through the 2 o'clock announcement tomorrow. Other things that kind of hit my interest, and that was I normally stay out of politics because it doesn't make me any happier and it doesn't make me any richer. But I did find that this was fairly interesting, and that was a warning from the I think he's the former or the current mayor of Chicago. And I think it applies to stock trading, too. He's warned his brothers in arms that they're confusing what happens in the media to what is happening in real life. And I think that there is this kind of thing. It's always been around in the stock market. That is that even though that there's kind of a tremendous sway that CNBC has in the market, there's more viewers now on Fox Business Channel than CNBC. In fact, there's fewer viewers on CNBC today than there were when it actually, on the first year after it came out. I think it was 91 or 92. But we continue to think that what we see is familiar, what we believe everybody else is looking at isn't what everybody else is looking at. And I would be very hesitant to start depending on the media at this point, who seems to do nothing but re-report that Twitter said something. Well, Twitter's a business, and generally they say nothing. It's a very lazy way to report. And most of the time they just use it as social proof for whatever agenda, whoever's pushing what is out there. But could we be getting to the point of saturation in Twitter where at least everybody already knows that it is not representative of what's going on in this country? I'm thinking very few things are representative anymore. You used to be able to take a phone poll. Now most of the people that know anything won't answer the phone. The only people you get answering the phone are people that have nothing better to do or don't have caller ID, which probably skews your results. most of the time when they do these polls, they'll vastly overrate one side to get the result that they want so that they can produce news and not report it. But I thought it was fairly interesting because generally you don't see people in Chicago, especially politicians in Chicago, I mean, really talking about reality opposed to a faux reality that is thrust upon them. But I just thought it was interesting and apropos because generally most technical analysis folk don't spend too much attention to the news. They pay attention to how the markets and the individual stocks actually move based on that news, not on the news itself, but on the reaction to that news. So we're not so much interested in the news or trying to predict it, but the reaction and what our reaction should be. Had a email earlier about shorting the GDX before the Fed announcement, and I just don't understand. I like to project what's going to happen, but that only works when I know that the entire market is going in an entire way, or enough of the market is going in an entire way. Just trying to think about how a handful of people are going to make a decision. I don't think you can. You can predict. I think you can predict herding mentality in the markets, but I don't think you can predict that in the Fed. I think we kind of know what they're going to do. I'm going to wait and react and not try to anticipate what the market does for tomorrow. Okay, what else do we have? Got a few more things here. That's kind of it. I just, we got a day where there isn't a lot going on, where everybody's kind of hanging on every tweet. And for the most part, in 24 hours, does it even matter? In 12 hours, does it even matter? In this case today, well, we're back to almost flat. I'd say statistically in the realm of less than a standard deviation of what noise should be just on a random day, being down 5 points on the S&P cash. Is it worthless? No, it may be just something to trade the other side of, because no matter what it is, it doesn't seem to reflect reality. It's just my thoughts out here on it. Anyway, we've got some stocks to look at. Like I said, Apple after the bell. We're going to look in the next segment at a stock that came out with earnings that is closely tied with Apple. So we'll see how that does. We'll talk about that a little bit. We've got a lot of other stocks to look at, and of course, many others coming out with earnings in the next couple of days. So we'll be kind of busy. And like I said yesterday, maybe there's not a lot going on at this second. But generally, like if you're painting a car, it's all about the preparation. It's all about getting everything right. It's not that much about spraying the paint on the car. It's all the prep work that goes into before you can paint it. And I think making a profit is going to be spending a lot of time thinking about different scenarios as we go into the kickoff tomorrow at 2. We'll be back in just a minute. We should be hearing the music start to pot up right now.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we're back. Let's do a little history, and then we'll get into some charts. What do we got? Oh, a little history.
And it's all just a little bit of history repeating.
On this day in 1945, the USS Indianapolis is torpedoed by a Japanese submarine and sinks within minutes in shark-infested waters. Of only 316 of the 1,196 men on board survived. However, the Indianapolis had already completed its major mission, the delivery of key components of the atomic bomb that would be dropped in a week later at Hiroshima to Tinian Island in the South Pacific. And of course, I always remember that part in Jaws where he starts talking about the sharks. Pretty scary stuff. I liked, it was Roy Scheider. I'm trying to remember the other guy. Quint. But of course, the best movie, the line in the whole movie is, "We're going to need a bigger boat." And maybe we will. Once the Fed gets all saddled up. Anyway, let's go ahead and look at the markets. As I said, one of the things I thought was interesting is that we did have Corning come out before the bell, GLW. Of course, that company makes the Gorilla Glass for these. I've been thinking for a while that numbers on iPhones have been coming down. They've been able to mask it by higher sales of the AirPods, which seem to roll about 2 years before the batteries die and are unrepairable. They're starting to get people to continually buy them, and it's not that it's $200, but it's $200 at a margin. It's $200 where it costs them about $50 to make it, and they walk away. Since most of these are sold retail through Apple alone, are making about $150 of gross profit on these things. That is covering up a great deal of the early losses, or let me put it this, the fulfillment of just about everybody that wanted a phone has a phone now. All markets mature. The question is, how will the market take a look at lower revenues, but margins that continue to probably get a little bit better? The phone itself is somewhere around $400, maybe $380 in cost. They sell for $1,000. That's a lot of profit. But again, you've got to put $400 in to get 1,000 out or 600 more. So still fairly decent margins. They don't sell the phones directly themselves though. So there's a discount, maybe $750, $780 to them. So, you know, there's a lot of retail profit that's got to be shared with people like Best Buy and the rest. Again, right now, they're more of the Kirby vacuum cleaner company that is selling attachments and services now that that whole business has matured. When we look at Corning, he said, not a lot. Oh, yeah, Robert Shaw, I forgot. Yeah, he died not much, about a year later after that. We've got, you know, fairly heavy volume on the way down in Corning. Not a lot of discussion yet about why they missed so badly, but they certainly did. This is the pattern that I suspect we've got in a lot of these, and that is as soon as they are close below 3x3 now, they are starting to continue to fall. One of the other things that I thought was most interesting is a pattern over the last 3 days, and it may even be continuing on today. I'll know about 3:30 or 3:45, and that is the highest level of continuous bearish sentiment in the VIX. Most people, I talked about it a lot of times, and they don't know what it is. But the VIX, why some people call it a fear gauge, it is a mathematical algorithm to approximate volatility going forward. It is all of the options, the puts and calls, and the premiums on those puts and calls that are out of the money. That is that the options are only worth the premium. There's no inherent value in the shares of that. And that means the idea is that the VIX reports what should be an outlier and what should be an inlier. Most of the time, if you're buying out of the money puts and calls, they should. Okay, I found for him for 3, but I'll catch him. Oh, good. Okay. Dave in Framingham. We're going to go back to AK Steel today. How you doing?
Fine, David. The earnings came out, and they were 21 cents, and they expected 6 cents.
Yep.
Now what?
I think we're waiting. I don't, you know, maybe the technicals improve, but my guess is we're always just one tweet away from China and that all. Like I said, I think no matter what happens, it's probably bullish for steel over time. I just don't think you're going to get a lot of people to jump on that horse until the trade issues are over, one way or the other. But I think either way probably helps steel over the next few years. All the market wants is a resolution. It doesn't matter really which way. If China trade talks break down, there's probably going to be a little initial weakness in steel. And then, of course, the thought that, hey, if we want to make anything, it's got to be with U.S. Steel, and these things are going to start doing well again. So I like it. I didn't see anything in here that said that they were going to blow out earnings. I just didn't think that I wanted to be bearish on it. This is a continuing call on the, not on the which way that it comes out, but a way on, you know, it being resolved. So I don't have any problem if you just buy it and hang on to it. But again, treat it like an option that just doesn't expire.
Yeah. Do you see it going up very much from the 3 area here, do you think, or?
I don't see much of anything at this point until you get resolution, because no one's doing anything as long as they don't know which way the trade talks are going to go. Okay. So as soon as that's over, this probably takes off like a rocket for either reason. But this is a call on the trade talks either falling apart or getting done. Either way, there's going to be some kind of cutout in that trade talk for U.S. steel, or we're just not going to be able to buy China steel as cheap as you can get it from the U.S. suppliers. So either way, I think it's good long term. But my view of this hasn't changed for a long time, and that is you need some kind of resolution. It needs to be over. Either way it gets over, probably long term is good on AK Steel. Everybody will freak out if the trade talks seem to go away and we get tariffs. But I mean, there are going to be tariffs in steel no matter which way these trade talks go.
Okay.
So,
okay.
I would just. Are you in it now?
Oh yeah, I was in it around $1.75.
I don't see any reason to sell it. But know that you want to hang on to this for the next year. It's not a trade. It's more of an investment. We'll be back in.
Thank you, David. Thanks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And Dave, you're still on the line? No. Okay. Good enough. Okay, we're done there. As we said, I was just going to pop up U.S. Steel here for a second. Again, not a big signal out here, but again, these steel stocks probably one of the most protected in any deal coming forward. But you know, you're waiting for the day that that giant news comes. If you're in those, I suspect. markets are pretty good about that. They don't like indecision. And if you can do anything like the FOMC meeting, you can guarantee the market to do nothing for a handful of days or even longer if they're waiting for something. So at the moment, it's hurry up and wait. Let's take a quick look at Apple before we go in there. Up against resistance, like I said, highs probably 220, lows 198. If we're looking for after hours action, it's somewhere in there. They'd really have to come out with something that I do not see going to Best Buy and the rest. They've got a good sell rate, but does that make the stock worth that much more? I don't think so. Maybe there's something I do not see in it. I am not playing it after hours, by the way, or into after hours, let me put it that way. AMD, another stock out here that is a highly valued positions. It's already got a sell signal in it with a test of almost 100 million shares back on June 10th, getting tested with 67 million shares on June 16th. It's continued to hang up here. Actually fairly weak. Energy off the last low is June 24th. I do not know if it will happen this time or it will happen next time, but the margins continue or should continue to slip. And since these things are all about massive margins, those massive margins probably those margins will probably drop. And Wall Street probably in the conference call is going to be discussing that. If they acknowledge the fact that dropping the prices on the video cards and their CPUs is going to affect that margin, I think you'll probably see AMD come back. If they really had blowout numbers, you get to maybe 36 or 38. My guess, though, is this is headed back down to $28.67. Okay, what else do we have? Electronic Arts also after the bell tonight. They haven't done anything for a while. There hadn't been any new games, and there hasn't really been the discussion of some big games coming out this fall. The new games that are serialized for action, like Fortnite, have really eaten into the amount of money people are spending on existing video games, although it's still a good business. We may have hit a kind of high water mark for the video game business until it finds a way to get everybody playing back on PCs and not playing the online massively, what is it? I can't even remember. Massively MMO. But it is back. Now, Electronic Arts is sitting at its low, bounced into it today, into this gap that goes back to the 8th of February. Again, this is one that I think could be fairly weak, but we shall see. I don't see anything in that area or advertising or people talking that tell me that that segment has heated up in the last quarter. They generally start announcing the games that they're going to release for the fall where they make most of their money about now, but it's still a few weeks away. Generally, they don't get into what they're going to release until late August. So a pullback at this time might be a prudent buy late in August when they do come out with what they're saying that they will come out with the new titles. And remember, a lot of the titles that these guys make will, probably 2-3 times the budget of a movie. So if these things fail, they're tremendously huge failures for these companies, and it takes them 2 years, a lot of times 2.5 years. Most of the other titles that they have are just upgrades of previous titles. They really need to get some new things. It's kind of like Marvel movies, all about fantasy lives instead of reality. Maybe what's wrong with this country. But the movies are the same thing. We're going to see a giant collapse one day and no one wanting to go see any more of the Marvel movies. That's just the way it works in movies. Same thing, the way it works in video games. Everybody just kind of gets tired of it and seems collectively at the same time, and then it rolls over. So Electronic Arts really needs some new titles and maybe something other than a first-person shooter out there. What else did we have? Amgen also after the bell tonight. FireEye, Paycom Software, Zendesk, which is actually, that one's been kind of a rocket off of last earnings call. And I heard some people talking earlier in the den about tech support, but this is what this company is all about. Once you hit 90, there's generally an 85% chance that you hit 100. And I would say, I got to sneeze. I would say if you wanted to take one that was probably going to hit, one that was going to probably hit 100 tonight, it'd probably be Zendesk. Everything has been going its way for a while. And let's go back and look. This thing kind of came down before and came up. I won't, of course, be playing these. I just think I wouldn't be short this one going into earnings. Akamai, I didn't get to it on Friday, more than I think one sentence when I was talking to Tom O'Brien. We were talking about earnings and Amazon's earnings. And one of the things that was buried in all that, all those 10Ks and everything else that come out of earnings was kind of some statements that were talking about web services hitting some kind of highs, in the fact that everybody that wanted to move to it is kind of moved to it. So you might have got to the point where we're fulfilling demand in web services, but you need, $90 if they outperform. If they don't outperform, you're looking at about 77 on Akamai. But I'm starting to worry. The first hint that maybe that business has gotten to its maturity for web services, cloud services, was in Amazon's report last week. We'll be back in a minute.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
As you said, a lot of earnings out this morning and last night. I'll just run through them real quickly. The one that I thought was surprised, we were looking at the housing industry, and kind of interesting to see D.H. Horton have a fairly decent day after, of course, Pulte dropping the chalupa. Fairly decent volume. Looks like we're going to get close to that volume of April 24th, where we had 5 3/4 million shares up at 47.02. Still a little bit short. Didn't get back up into it, but it's holding most of the pop today. This may be a short squeeze on them not dropping the chalupa as bad as others. But we shall see. Other things going on to Merck, and not much of a move, so I'll move on from that. Less than 1%. Xerox down about 3%. Procter & Gamble, which has, of course, been the safety trade. If you're doing the safety dance, one more move higher, and it looks like everybody continues to be worried about a market that might pull back. As we talked about earlier, some of the highest levels of VIX shorting are being bearish in the VIX that we've seen in many years. In fact, right now, we're, at least in the last 3 days, we have conditions that happen about 1% of the time. So there isn't much in that fat tail of distribution that says that people aren't worried about a huge problem tomorrow. But generally, when you get that many people on one side of the boat flips. I thought maybe we might have a fairly decent opportunity for the market to go lower tomorrow. But generally, if you see people buying a lot of downside protection in the VIX, generally the market goes the other way, or at best flat. So I think I'm going to wait for a while. What I would love to see is a spike that runs all shorts out of the market, that rotates back down and gives us a sell signal. Other than that, maybe we are going to go higher for a much longer time frame. We had weakness in 2006 and the same kind of bearishness that really didn't, everybody was about a year ahead, that took into 2007 before it developed. So maybe we're in that kind of same time frame where we are about a year ahead. Either that, but generally you don't have conditions where people are that incredibly bearish. It generally means one of two things. Either they're predicting that 1929 September is coming, or that March of 2009 is here, which is when the market took off like a rocket and has done nothing but go straight up since then. But at same times, we've had those kind of incredible pessimism in the markets. Sometimes they're right, sometimes they're wrong. What else do we have out here? I wanted to look at booking.com talked about it is closing back below. I suspect this would be weaker as Brexit continues to come in the front windshield a little closer to each day. COF dropped the chalupa by being hacked and all the way back into this gap up from the, what is that, July 19th. July 19th, is that right? Yeah, July 19th gap higher. And that was on 4 million shares. You're down today with 9.5 million shares. Again, this one never really got the volume or sign of strength above the April 29th high of 4 million shares at 94.38. It just kind of fiddled around as earnings. And again, no real clear sign other than the fact that it went above previous high, never had volume in it, and then fell apart. And again, this is a tough thing because generally when they get into the 90s, they get to 100, and I wouldn't have been able to pull the trigger on that short. Even if I knew the news, I don't know if I would have been able to pull the trigger short. What else do we have? EGO, Eldorado Gold. Again, no sign yet that these things are turning south, at least in this one. But again, nothing but a move higher since the May 28th pop higher in this one. I've been watching this one thinking that we're going to see at least the beginning of a fairly decent move in gold and get the retracement here soon, but zero sign of that so far. Let's see what else we have. JP Morgan, as we look at this one, back into the highs. It needed 14 million shares, got about 12, so it's not all that bad, but at the same time, not getting any kind of sign of strength back in these. Continue to think that maybe CarMax may be one of the most overpriced stocks in the market now. It did close below the 3x3 today. It got into the 92s, and again, once you get to 90, you're probably going to 100, and it makes it problematic. I was hoping that this thing would not break the 90s in the last few days and would see a close below it. We have not gotten it, but volume has been pathetic the last 10 trading days in CarMax. And I think we're going to see, if we get that quarter-point rate hike tomorrow, which I think probably a 99% chance that we get that. If we got more, maybe this moves. But at any point, we do know one thing, and that is repossessions on cars is going higher. And when that happens, you should see higher rates independent of the Fed rate for auto loans. Now, a lot of times, if new car sales are down, used car sales are up, and these companies make a great deal more money on a used car than they do on a new car. So you never know how the mix will be on these, but it has looked fairly weak for a few weeks. See if this one doesn't move fairly strongly after the Fed tomorrow. As we said, we were looking at other stocks in housing. Lennar's had a little bit of a bounce, got to 49.08, gave it all back today, but no real juice. I suspect these will also be highly volatile. One of the stocks that I hadn't looked at for a while is Methanex Corporation. A lot of people talking about natural gas and that kind of stuff. Continues to look like maybe this thing may be finding some kind of low. Symbol is MEOH. This is the July 11th low at $40.43 with 900,000 shares. You had 584,000 shares yesterday to the downside. So you were about half. Now you're kind of back in it. I don't know what the market is for methanol right now, but MEOH. I always want to go miho, but because that's the way it's spelled. But interesting, that one may be a move in the energy sector. It's one of the few actually showing some signs that may be making a low out here. We'll be back in a minute.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back, trying to get everything set up so I can go run some errands and come back for earnings. As we said, a lot of earnings out after the bell tonight. When we look at tomorrow morning, we've got General Electric, Spotify Technology, Ameren Corporation, Humana, a handful of others, Garmin. And that's kind of it. Now, of course, after the bell tomorrow night, Qualcomm, Twilio, Western Digital, Fitbit, Boot Barnes Holdings, a few of them like that. And then, of course, we get into Friday, too. So got a lot of action continuing. I think once we get through the Fed tomorrow, and especially into Thursday, we're going to have some very good trading markets. We're going to have an idea how the market reacted to the Fed, and we'll be able to make some better long-term choices. I am all cash right now and everything. I don't like being long nor short into the unknown. To me, that's always been a gamble. I always like it, not so much that you have to react and not anticipate anything, but at the same time, I don't like to anticipate what a handful of 8 or 7 or maybe even one guy is going to do at the Fed and how they're going to state that policy and how the market will take it until they actually figure out what it truly means, which is probably not what the Fed said. There's always kind of that back and forth, and you get at least 2 or maybe 3 different moves in the market before it's ready to go anywhere. But that's kind of it. There's not a lot to do. Watch the earnings tonight, get a lot of sleep, get ready for some action tomorrow afternoon, because all the preparation is maybe going to pay off tomorrow afternoon. In the meantime, sell when you can, not when you have to. We will see you here tomorrow. Same bat channel, same bat time.